The bearish star candle from the 27th marks at least a minor retracement, which has so far in the short term found difficulty going lower than the 50% level around the mid-40s, and if bearish sentiment can't progress to close under 42 by the start of next week, a bullish continuation scenario can develop for another attempt to decisively close through the 67 to 80 range, where there's slightly stronger resistance potential for the first half of March. Price rising along the 50% arc like in this illustration would still likely need daily bullish volume at or above 7 million to firmly close over 80 to put the low $1 range in sight. It would be preferable for price to not form a range from 47 to 67, but rather make a quick drop to 27, ideally within the boundary of the red spiral, so that the chart can quickly stabilize and balance out after the steep rise from last week, resulting in a deep retracement, short-term downward overextension, and contact with a solid long-term support area to get price into a stable range moving ahead.